A high-rise condo is probably the worst investment that you could possibly make. And I'll tell you why. The value in owning real estate is owning the dirt. You know this better than anyone. And so you go buy that high-rise condo that has an HOA. Most of these buildings have HOAs. And oh, by the way, those HOAs go up every single month. And as those HOAs go up every single year, the amount of people that actually are willing to buy into that condo goes down. And so at the same rate, a single-family home in San Diego or whatever market that you live in the country went up by 50%. That condo now went up by probably a fraction of that, maybe 15%.
You and I talked about this, about me going carnivore. This has nothing to do with real estate right now, but this will make sense. I'm so gung-ho on carnivore because I saw such a big difference in energy once I started eating that way that I've been trying to get the whole staff on board, right? Hannah is really, what would be the right word? Resistant. She's really resistant to becoming carnivore, right? So she made me a bet.
Okay, what was the bet?
The bet is that the housing market is going to crash in California in the next 2 years. And if it does, I have to stop talking carnivore. It's over. But if it doesn't, she's jumping on board. Okay?
Okay. You got to get her to Born and Raised. You and your wife were there after our last meetup down in San Diego. What did you think of Born and Raised? Because I go there 3 times a week.
Unbelievable.
Oh, my gosh.
The restaurant, if anybody's visiting San Diego, Born and Raised was one of the best experience restaurants we have been to. It felt almost like a early 1900 vibes.
1920s.
Boom. 1920s. Yeah. Food was insane. Vibe was good. Drinks were good. It was ideal.
Yeah. And if anyone listening this wants to go to a great steakhouse, go to Born and Raised in Lit Italy. It's on the India Street. And go ask for Travis. He is the best bartender in all of San Diego. Go sit with him upstairs, and he will make the entire experience so freaking legit. I promise you will not regret it.
Look at it. I mean, we might as well put ads in the description. But I'm not letting you off of this one. Housing market. I very clearly do not think it's going to crash. I think the single family market in California, I think it's too undersupplied. What do you think? Next 2 years, are we going to see a crash?
So if you look at the rate environment, we've been in a high rate environment over the last 30 months. And if you would have told any real estate investor or entrepreneur 30 months ago, hey, the rate environment's going to more than double for 2.5 years, and every single market, relatively speaking, entire country, we are not going to see more than a 10% dip in home prices, everyone would have thought you were fucking crazy, right? And so if you look at the big picture, and the Fed just announced last week that they're going to do a 50 basis point rate cut, and so I think the worst is behind us. And so to think as a real estate investor, logically, that we've been in a high rate environment for more than 30 months now, and we have not seen more than a 10% dip in most markets around the country, it leads me to believe 2 things. One, the supply-demand fundamentals are stronger than most people believe. So on the supply side, we got a huge shortage of housing. I've seen a lot of articles out there where they say we're 4 to 5 million housing units short of where the demand is. But this does not account for the 30 million dilapidated homes in America that are not livable, they're not rentable, you cannot get bank loans on these homes. And so if you really think about it, we're really about 35 million housing units short of where the supply is. In 2020, COVID happened, so a lot of builders pulled back on new builds. And then in the last 30 months, because of the high rate environment and all the bad news in the marketplace, there's been a big pullback in new builds as well. And so if you look at that, that's the supply side. Now the demand side, this is a whole other ballgame right here in conversation. From a demographic standpoint, the baby boomers are living a lot longer than they used to before. They're not selling their homes and going into retirement homes as early as they once were. But also, you got the millennial demographic who is buying homes for the first time. They're starting families for the first time. And then the Gen Z demographic, which is even larger than the millennials, they're moving out of their parents' house for the first time. They're looking for apartments to rent. And so if you take a look, macro perspective of the supply-demand fundamentals, I think this bodes really, really well for the folks right now that have spent the last 30 months finding good deals in great locations, getting discounts, because I think as this rate environment normalizes, we're going to see a lot of uptick. Now, the last thing I'll say is this, and this is very important for your audience. The Federal Reserve has printed 80% of the money supply in the last 4.5 years. A lot of that money has been off of the playing fields and on the sidelines because of the high rate environment, long-term government bonds, et cetera. But once these rates normalize and a lot of those chips come back onto the playing table, we are going to see another run. And so whether that's next year or 3 years or 5 years from now, I don't know. But one thing I do know is the government's not going to start printing money. And so if you can buy good assets in good locations, areas that you can hold long-term, 10 years plus, and let inflation, let time do its thing, you won't regret it.
Okay, so I pretty much agree with that outlook, but there's one caveat that I just think is interesting. I don't think the odds show that it's going to play out this way, but I think you have to somewhat consider the potential. Everybody on the single family kind of residential side got locked into homes, right? Like the Fed, by raising rates the way they did, they almost created like this new generation of real estate investors, right? Because now most people that would look at selling and moving into a new home entirely are looking at 2%, 3%, 30-year fixed going, I'm not selling that thing. Sure. I'm just going to either, take some cash out and go buy a new primary and put that into a rental property, or the thing's going to be passed down, right? Do you think there's a case to be made that when rates start getting lower and get somewhat to the point of getting close to that 3%, will that then free up homes from people that wanted to sell but can't justify going from a 2% to a 8% 30-year fixed?
Absolutely. I think there definitely will be a tick up in supply. And there's certainly going to be a tick up in refinances. We've already seen the applications for refis over the last week has shot up. And we're seeing loan officers start putting out content on social media again for the first time in 30 months, which is kind of crazy. That's a whole other conversation. But that said, I think there will be a tick up. But if you think about it, like the people that really needed to sell sold. It's not like they were like, you could have this whole time sold and then went and rented. You don't need to buy another property. You could have rented, kept your cash on the sidelines, and then re-entered the marketplace when the rate environment normalized.
Yeah, that's true. Well, what's your thoughts on renting? Like you saying that makes total sense to me. But if you tell a lot of people sell your house to rent, most people will think you're nuts, right? What's your thought on renting? You think it's throwing money away, or do you think it's just a cost of living that you are going to have one way or the other?
I think it's the quote unquote American dream is to go to school, get good grades, go to college, get a job, buy a house, get married, start a family, invest in your 401k, diversify. And I think owning the home that you actually live in, a primary residence, is one of the biggest fallacies in America today. If you actually run the numbers, run the math with most markets around the country right now, it's actually a lot cheaper to rent than it is to own. And so for me, where I live, I'll give you an example. I rent about $12,300 a month. It's a high-rise apartment that I rent, and I moved in for a $500 deposit. I got 1 month free, and I paid $12,300 a month. If I was to buy that condo, it would have been about $300,000 down payment plus closing costs. And the way rate environment is today, PITI, interest rate, taxes, insurance, I'm looking at a payment of about $20,000 a month. So I'm saving $8,000 a month to live there. I'm saving the opportunity cost of putting $300,000 down plus closing costs. And now I can take that $300,000 savings and put that down on more real estate, investment real estate that pays me every single month. And oh, by the way, has tax advantages.
Okay, so the justification and why rent no longer means throwing away money is because you're taking what in theory would be a down payment and putting that into a rental property or cash flowing investment, which is then putting you in a position where you're paying your cost of living the same way you would with a mortgage. Rent is actually much cheaper in contrast to ownership right now. And that money that, in theory would go into the home is actually earning a higher return in an actual investment property.
100%. And also if you look at where I live, it's like a downtown area, Little Italy neighborhood, a bunch of high rises.
It's a nice area.
It is a nice area. I love it there. Now, I never want to own a condo. A high rise condo is probably the worst investment that you could possibly make. And I'll tell you why. The value in owning real estate is owning the dirt. You know this better than anyone. And so you go buy that high rise condo that has an HOA. Most of these buildings have HOAs. And oh, by the way, those HOAs go up every single month. And as those HOAs go up every single year, the amount of people that actually are willing to buy into that condo goes down. And so at the same rate, a single family home in San Diego or whatever market that you live in the country went up by 50%, that condo now went up by probably a fraction of that, maybe 15%. Right? And so for me, I never want to own a condo, and that's why I decided to rent and parlay that with the reasons that you just alluded to. The main thing is the opportunity costs. Run the numbers, what's cheaper, what's not, and then opportunity cost-wise, there's always an opportunity cost. And for me, I would rather own investment real estate that I can force appreciation, like commercial real estate. I do value add projects, control my appreciation, control my valuation, and then I get the tax benefits in addition to that. See, a lot of people think real estate's about cash flow, but in all reality, real estate is about debt and taxes. And I think once you understand that, things change for you perspective-wise.
Yeah, we talked about when I did your podcast that everybody talks about the importance of cash flow. Mm-hmm. And, we mentioned that, like, I don't really care about cash flow. Like, you when you're doing a project, you do want cash flow coming in because that is like the lifeblood of the asset, right? You don't want to be paying your expenses or your debt service yourself. Now you're in kind of primary home world. But the true wealth comes from appreciation, right? Same with building a business. Where do you really get your wealth built? On acquisition, or when you sell the company. Mm-hmm. So be careful if you put all your attention towards cash flow. Like from a return standpoint, it's always going to be less than what you can get if you're forcing appreciation, especially in a high appreciation market.